All right. Well, thank you very much, Richard, for being part of our podcast today on the Practical Broker. I really appreciate you being here and taking the time to do this with us. And
Yeah, you bet.
It's great. So I heard from what you're telling me, you're a father of 5.
Yes.
How old are your kids?
So they're all under 12. So basically 11, 9, 7, 5, and then 1.5, we'll say.
Wow. That's awesome. You must get the same thing I get all the time. Is I have 4 kids, and people think, I look like I'm in my 30s. You look like you're in your early 30s.
Yeah, I'm 35. So.
Wow, that's awesome. Congratulations.
Thanks.
I don't know if you get it. I get it all the time. People saying, "How do you manage to have your businesses and they're different, and 5 kids and being married and write 2 books? Like that's pretty impressive."
Yeah, it's my wife. She gets the credit.
That's awesome. So Richard Moxley is, for our listeners, he's a well-renowned author. This is your second book coming out.
Yep.
You've been hosted on CBC and CTV, as well as a whole bunch of various media outlets. It's quite an accomplishment. And this is your second book. So how did you find writing your second book versus your first one?
The second book was a lot easier and harder at the same time. So the writing process was much easier, just because I had spent the last 6 years essentially with a very well written message, but because there's been so many changes, with doing speaking engagements and talking with clients, there's many things that the book was outdated on, or things that I'd been essentially thinking I really need to update this because, so much has changed, or I've learned so much more than what was in the first book. And so what I had learned from writing the first book was that trying to sit down with everything else I got going on and just writing a book, for me, I don't have the attention span to be able to do that. There's always some kid or some, client that's on the phone, or, someone that needs attention. So what I found very useful is when I was dealing with a client, or when something was like, oh, yeah, that's really good information. What I would do is just pause for 5 minutes, write it down. And then as I was going and preparing for the book, then I could go and elaborate and make sure that scenario and that story was in the book, because then I had the credit reports already saved to a specific file that was essentially for the book. Then I could review it, go through it, and write it in more detail and remember what was that aha moment that I had.
That's a great strategy. I'm 3/4 way through writing my book on private lending and teaching investors how to lend their money. And I wish I would have taken that strategy. It would have been so much easier than going back. What did I do 5 years ago? Yeah.
It's hard to replay that. And so that's what I found is just whenever I'm surprised, or, I was like, yes, this is the perfect example for what the message I'm trying to get across. Then I would go and match those up and then put it in a file separate so that I could find it again, which is always the hard part, trying to find it again.
Sure.
Yeah.
Yeah, my Google Drive folder is a little bit of a mess, as my staff knows.
Yeah.
So you started in this business as working for one of Canada's largest teams.
Yes.
And then that led you into the passion for credit and really realizing that people, they were paying high interest rates, high fees, and sometimes for very silly reasons.
Yeah. Yeah. No, you jump into the industry, and I started in 2006, and at the time, I don't know if a lot has changed, but they don't really tell you anything about credit reports. You essentially just learn on the job, and you essentially regurgitate whatever your head broker or whoever's training you or whatever you kind of hear. And when I sat down and wrote the book, then everything becomes very real, because you don't want to put your name on something that someone could challenge or, essentially call you out on. I had this dream. I was, on a big stage or something, and then someone's like, no, that's not how it is. And you wake up and you're like, oh crap, do I really know how it is? And so that's why studying thousands of credit reports and getting that message very well firmed, and then testing all of it, was a very important process for what I was trying to do.
Absolutely. Yeah, I've been in this business now 25 years. And when I first started, same thing, there was nobody to teach you anything really. They said, okay, here's your credit report. I'm like, okay, what does all this stuff mean? And what all these codes and even the credit providers, to dig for what some of these codes mean is challenging on its own.
Yeah. And the challenging part is that the lenders rely so heavily on this 3-digit mystical score. However, they don't even know how that is works or how the system is set up. And so when you go and challenge them on something, it's like, well, no, it just can't be done. And it's like, well, okay, so you're obsessing about the score. You have no clue how it's really developed. And I understand why, because it's not like Equifax and TransUnion make it easy for anyone to know what's going on.
Yeah,
and so,
secret sauce.
Yeah, it's and I get that. But on the flip side, when you're desperate to get deals done, it's like, okay, well, I can't just go back to my client and say, well, sorry, come back in a year. It's how do I get this done? And if we can't get it done, what do you need to do specifically, step by step, in order to get it done?
That's fantastic.
Yeah.
So you left being a broker, and then you wrote your first book, and you opened up the other business called eCredit Fix.
Yes. Yeah. So the transition was definitely a big jump because I was doing a lot of good volume, busy, but because I had spent so much time on the book and studying thousands of credit reports and now starting to get some traction on like some really good feedback from clients, they'd say, well, the book's great, but can you just fix it for me? And it's like, okay, well, let's see what I can do. And I found out that I actually have direct and exclusive access that the consumers don't have. And so when I was telling them to go and say, well, just call Equifax, they'd come back and say, have you ever tried to call these guys? And I had never called through the consumer side of things. And so I start sitting through the hours and the headaches of, them all of a sudden disconnecting all the lines just because they wanted to, talking to someone in the Philippines because that's where the call center is routed to. Right. And their whole society doesn't run on credit like it does here in North America. And so, first of all, you're talking to someone where there may be like a language barrier, which is hard enough. And then you're then talking to someone who really has no concept whatsoever on credit or what it's doing to you and are just reading from a script. And then their script is essentially designed to tell you to get off the phone. Like, what do I need to say for you to hang up, right? Because they legally have to provide a way for the Canadians to fix their credit, but there is no rating system. There is no government agencies that's essentially saying, "Wow, you got great customer service. This is great." And so, really, it's a bunch of consumers really ticked off because they're trying to do what's right. They're trying to figure out what's going on, but with no one to really help them. I kept on running across that time and time again, and I understood what they needed from the brokering or the mortgage world, but my passion and seeing time and time again, is just dealing with brokers' clients all the time is like they just need someone to either do it for them or at least point them in the right direction. And so I thought that could be my niche.
That's awesome. So yeah, you followed your passion and created a really amazing business and a couple books. And I'm sure that's going to lead into a lot more speaking engagements and training. That's great. Yeah. I wish they would do this in high school. Start teaching people young about their credit.
Yeah. And I've done some with the schools and it's always fun, but there's so much to learn and it'd be really nice to get with people before they mess it all up. And not even the concept of paying your bills on time, because I'm sure everyone's mom has told them that. Yeah. But the concept of how does it all work? What are the things you need to focus on? What are where are the traps? Because that's the biggest one is people always say, well, I have great credit. Yeah. Well, that's great. But do you know all the traps that could come between now and the time that you need financing? Right. Because that really sucks when you assume you have good credit and then all of a sudden you're getting declined or charged higher rates until they have to see you, Chad.
Yeah, exactly. One of my favorite things is, the customers go on and put the fraud warning on the true name where they got a phone, right? Call this phone number.
Yeah.
And then they don't have that cell phone anymore.
Yeah.
And it can take quite a time before you can get that phone number updated. And, they got 4 days to waive a house or waive a condition. And that's, get pre-approved, have your credit checked early, monitor it.
Yeah, know what's going on. It is a game, and that's the title of the new book is the credit game. And we're all playing it, whether you want to or not. You can sit on the sidelines if you want, but we're all part of this game, just because that's what our society has deemed as necessary. And insurance and love life and everything is kind of tied around this credit score. You might as well know what's affecting it, because it's not just pay your bills on time.
Absolutely. Well, one of the things you talk about is that, the score, right? That there is no just the score. That's kind of ambiguous. Each bank has different ones. And, why is one version? I had a client the other day say, well, my score at the car dealership was 50 points higher than yours. What's going on?
And then everyone just assumes it's because you pulled a new credit report and that inquiry dropped your score magically 50 points. Right. No, that's not how it works. Yes, you can drop a few points, but not 50 points by an inquiry. So this is where a lot of the confusion comes into play, even when you're not even looking at the score, but even the advice that is provided by different professionals out there is they say, well, this will build your credit score. Okay, well, what's credit score are you talking to, right? Or referring to, right? Because yes, that may be true for the ERS 2.0 score, but does it affect the FICO score or the bankruptcy indication, navigation score? Like what score are you talking about? Because we use credit score as this, as you're either got it or you don't, or it's good or it's bad. Yeah. But a score, what you see on the consumer side when you go and pay for it with Equifax and TransUnion, or you use one of these free apps, can be 100, 200 points different from what the banks and lenders are seeing. So it really, to try and obsess about the score is very misleading, and that's something that I think consumers need to know more about.
I agree. So what's your opinion of the things like the Credit Karmas of the world and all those that, the score is typically very different than the institutions are pulling or the mortgage brokers are pulling?
Yeah, so I think one of the things I love about these new apps and all the advertising that they do is it is bringing more emphasis on credit in general. No one wants to pay $20 every time that they check a credit score. And so when you get it for free, well, then it brings more attention to it. And I think that's really important for people to know, especially with all the fraud and errors that are on credit reports, to be able to check it and see, wait a second, I didn't open up an account. What's this inquiry from, this lender? And it allows you to be more proactive with your credit. So I really applaud those types of services for it. And I do like them on the fact that they're free and that you can track what's going on with your credit. What I don't like about this obsession about the score is that people assume that because they see a 700 or an 800 or even a 500, that is what your score is. And getting more people to focus on the score is really the opposite of what my message is. My focus is, don't worry about the score, because you will never be able to actually see the score unless you're a bank or lender anyway. So don't obsess about the score. Let's focus on how to play the game and what controls the score. And once you know that, then you're in control. You're not sitting back like, why did my score just drop 20 points? Or why is it, oh yeah, it's good this week or this month, and then next month it's dropped, which leaves you kind of sitting on the sidelines just watching the game. No, let's get involved and once you know how it is played, then really you're in control. And, if you're going to speed and get a ticket as a consequence, that's fine. But at least going ahead that was, you broke a rule, so now there's a consequence.
Right.
But what really sucks is when you get caught for speeding when you just assume that it was something different, and then, you're really upset. And so I just want to give consumers, or Canadians especially, that choice and know what is going on, so they're not always playing the victim.
That's great. Well, so what are some of the basic rules that you advise the clients and to look out for? What are the basics of the game?
So some of the basics, that they look at, well, one is actually looking at the credit report, because knowing what's on the credit report and if there's errors or fraud is the most important aspect of credit. People will, just assume that they have good credit because the last time they went into the bank and wanted a loan, they got it. Yeah. So great, that's good. But, some other fraudster has just, taken you for $30,000, and now you have to go and fight with Equifax and TransUnion to get that actually corrected. So that's something that is the basics of everything. Another big one, and part of that, is that a lot of people only pull one. And so that is only looking at what I refer to as, half of the coin, or one side of the coin.
Right, yeah.
You really need to look at both Equifax and TransUnion in order to know how your credit is doing. And most people will draw to one company as opposed to the other, and just assume that, if Equifax is saying this, then TransUnion is saying the exact same thing. Well, that's not true either. It can be completely different stories, because not all banks and lenders report to both reporting agencies. And then like collections or different companies will use different credit reporting agencies. And so that leaves, really, in order to know what your credit's like, you got to be checking both Equifax and TransUnion.
Absolutely. Yeah, over my years, I've noticed RBC tends to, they love TransUnion and only report occasionally to Equifax. So there's like a 2 or 3 month lag all the time with RBC accounts versus the TransUnion, which they report monthly.
Yeah, and maybe bank with RBC, maybe bank with TD, who generally focuses on Equifax. Mm-hmm. Regardless, when you go and apply for a credit card with either of those, they'll pull both a lot of times. And so either way, you need to know what's on both as one of the basic principles of knowing how your credit is.
So one of the snippets I read in the book was about Facebook and your credit score. And I was like, what on earth is that? That's a new one. So talk to us about that.
Well, actually, there are some scoring algorithms that they test in the States on actually looking at your Facebook profile. But what I'm referring to with Equifax and TransUnion is your relationship status. And just with Facebook, being single or in a relationship, whether it's married or it's complicated, whatever your status is, it's important to know that joint credit really affects both you and whoever you have that joint credit with. Right. Which is a problem that a lot of people don't really think of, because we go into first a relationship only assuming or hoping that it's going to be a positive experience, right. Which unfortunately the odds are not in our favor on that actually being staying as just in a relationship. Right. There's a lot of things that can happen with that. But even if separation or divorce isn't something that comes up, one of the main problems with just joint credit in general is the fact that if someone were to pass away, that other person then inherits all of the debt. Sometimes, you can't have joint credit with someone who has passed away. And so as soon as the lender finds out about it, they could call the debt, which could put some people into some situations where they just don't want to be.
Right. Absolutely. Yeah. I've noticed a lot. It's better now, but there's a lot of people that still don't understand about a spousal card is not actually a joint debt.
Yeah.
So I'm still seeing, couples with typically the lady of the relationship having little to no credit.
Yeah, and it's unfortunate as well, especially when they just assume that spousal card or that co-applicant card is building their credit. Because even if your name is on your own credit card and you have your own, what you think is your account, if it's not reporting as an individual account, then it could be a co-applicant card. And so if it's not showing up on your credit report, then it's obviously not building your credit. And regardless of how well you've handled that, then really it's not benefiting you whatsoever. And so, I've had situations where even on vehicle loans, a couple goes in and their name is on this car loan, but the lender decides only to report it to only one of the applicants. And they assume that it's building both of their credit. They're trying to reestablish. Well, if it's not showing up on both credit reports, then it's only reestablishing or building one credit account, right, which comes into problems, especially when you're going for mortgage financing.
Mm-hmm. Absolutely. So what do you find if a customer is trying to improve their credit overall, not just their score, but improve, what are the top 3 things you recommend that they do?
So one of the biggest contributors is, late payments, which doesn't surprise really anyone. Right. However, what I've found is that people don't understand which accounts actually show up on the credit report. Right. And so one of the things that I find all the time, and I work with a lot of brokers across Canada and their clients, and a lot of times their client has messed up on a cell phone account. Yeah. Because, cell phones aren't like a credit card, right? They're taking care of the credit card and their loans and their mortgages, of course, but that cell phone, not a big deal. And so consumers really still don't understand that even though they're supposed to pay on time, they'll pay some of the bill with a cell phone. But what they don't understand is that a cell phone, there is no minimum payment. You pay all of it or it's late. So even if you're $1 short, if you don't take care of that before the due date, then essentially the company, the telecom company, will register that as a late payment on both Equifax and TransUnion. Right. Which comes into play because when a mortgage broker or any lender is looking at your credit report, your thought process is, well, it's not a big deal. It's just a cell phone, right? Like, I'll just take care of it next month. And some of the companies will actually tell you that it's okay. Just, they're not going to shut off service. Just take care of it next month. However, in the bank's mind, they look at it and say, well, if you can't control a cell phone, why am I going to give you $400,000?
Absolutely.
And it's like, well, if you look at it from that perspective, then it makes sense why a cell phone is such an important indicator of how you deal with your credit. Because for sure, if you can't control, a couple $100 payment each month, then why are we going to give you $1,000 or $2,000 payment to mess up? So that's how the lenders look at it. And so a lot of consumers don't understand what does show up. Right. And so the concept is there. Yes, we know pay your bills on time, but still that cell phone is what I find is like a huge problem for consumers and mortgage brokers out there, because they're trying to get it done and they can't because of all these late payments on a cell phone.
Absolutely. One of my friends that I know works for Equifax, and years ago, and it's public knowledge, but they were saying that they're going to start putting utility bills as well. Although I've never seen it actually show up, but there's a lot of talk about that being part of the credit scores and reporting.
Yeah, it hasn't happened yet. Yeah, in the States, you have the ability to actually ask for rent or utilities to show up, but not in Canada. So at this point, the only things that really show up are cell phones, like we've been talking about, credit cards, lines of credit, and loans, and then mortgages are now showing up on pretty much all versions of the credit report. So once again, not all banks and lenders report. The major banks do, but those are the main ones are the ones, credit cards, lines of credit, loans, and mortgages, and cell phones.
All right. Yeah, absolutely. So talk about a lot of advice that we get from the branches. Customers walk into the branch and say, "Oh, your credit limit is $20,000. You owe 10. I think you should drop it to 10,000 so it helps you get approved."
Yeah. So there's a theory and real life going on in pretty much all aspects of life, and we sit there and talk about theory, and then when we go into the real world, we start realizing that the theory can really mean absolutely nothing when it comes down to it. So that was one of the things that I really wanted to change with my first book, and also this continuing on with this book was, I don't really like, yes, we'll talk about the theory, but let's put it into real life perspective. Mm-hmm. And one of the things that I did for the first book is I tested this theory of, too much credit is a bad thing, or limits, how high is too high when it comes to a credit card limit. And so what I did was I went out and started accepting all of these offers from credit card companies. So ended up getting up to about 20 different credit cards. Wow. And, they just kept on offering me higher limits, and, I started accepting them. And so I was tracking that to see how each one would affect the credit score. What, would it drop? Would it go up? Was there any indication whatsoever that having too many credit cards or loans in general was a bad thing? Mm-hmm. And I found that in Equifax and TransUnion on their scoring algorithm, there is no negative for having too many accounts open, as long as there's not a lot of balances with that or too high of balance. Right. And so that was one of the things that I learned. The other thing I learned is when I went, so that was kind of, okay. And in the brokering side of things, most of the lenders, even if you have a couple cards open and it's got a $20,000 limit, as long they'll take it from the balance. That's how they take your balance and your minimum payment, and then they'll run that against how much money you make and determine what kind of risk you are or what your debt servicing. Yeah. If you want to use that industry term, is just your income versus your debt responsibilities on a monthly basis. So on the broker side, they just take whatever your balance is at the time. They pull the credit report and, 3%, and they run away with it. Mm-hmm. However, in the branch, I had an experience where I actually went into a branch and I was trying to get some business banking done. And so they pulled a credit report and, I got all these credit cards, didn't rack up the limits, but I had all these high limits, up to about 200,000 of credit card limit. And, it brought a very strange look from the banker because, why do you have all these credit cards? Like, why do you have such a high limit on all of these cards? And I said, well, you guys just kept on giving it to me. I wrote a book. I was trying to determine what was going on. Anyway, so she's like, but yeah, one of the things you got to be careful of is that on our side, on the bank and branches side, when you go in with a limit, they will actually max that out a lot of times in their system. And so assume that you are going to use it because technically the next day you could go and rack it up. Yeah. And so they go and max out your debt servicing based on those limits, not what your balance is. Absolutely. And so that causes a lot of problems. And so in my book, I go through the kind of the both theory and real life, that just because Equifax actually will increase your score the higher the limit versus the balance, right. And TransUnion as well, there's kind of that happy medium, because with the banks, you don't want to have a $40,000 credit card limit if you only make $50,000 a year, because you're not going to get approved for any of the banking stuff that you need. I mean, you could always use a broker, but there are stuff obviously that a broker doesn't do that you may need, and that's something to keep into consideration, that you may not want to use it as your retirement. How much money can I have as a buffer? So that's kind of the theory in real life on that situation.
Yeah, for sure. And it's something I've seen the same thing happen over and over again, both in the broker side and the branch side. And it's a balance, right, between, like you said, having the high limits and making sure your credit score. If you're not writing a lot of debt, it doesn't matter. But if you're, some of the clients are trying to, do the balance transfer from one account to the other account and play that game, which is also a very dangerous game.
It is, yeah. Yeah, might as well play some Russian roulette there while you're at it.
Yeah, absolutely. Sorry, I just lost my train of thought. Wow. One of those things. This is going to be an edit. So your book is coming out in when? A few weeks? It's launching?
Yeah, so it's launching during Credit Week, which is kind of the 13th to the 19th or whatever.
Yeah.
I'm going to be in Toronto with some industry events, doing some speaking and some promotion there. But because it is Credit Week, I thought, might as well have that the official launch date. So
that's great. Are you coming to the Toronto conference, the mortgage conference?
Yeah, I'll be speaking there. Oddly enough, not about credit, but about marketing. But I will be there. Yeah.
Wonderful. Well, I'll be there as well. We'll see you then.
Yeah.
And I look forward to to buying a copy of this book and having it and giving it to my clients. Is it available as digital as well?
Yeah. So the audiobook will be up as soon as they approve it.
Okay.
I guess there was one mistake on the image, and so that's all taken care of. And now, so it will be up as soon as another couple business days, I guess they say. So the ebook is up. The paper copy is technically ready and available, and the audiobook should be up in a few days. So yeah, if not already. Yeah.
Perfect. Well, in Toronto, I want to make sure I get a signed copy.
Oh, that costs extra.
Yeah. What kind of beer do you like?
Yeah.
If you're away from 5 kids, that's a problem on its own.
Yeah. Just peace and quiet is a nice payment there.
For sure. Well, that's great. Listen, thank you very much, Richard. I really appreciate being on the show.
You bet.
And hopefully we'll have you back on again.
All right. Sounds good. Thanks, Chad.
Thank you very much. Bye.